Thank you so very much, Charlene Steer. She can be my prayer warrior any day. Thank you for opening up. So if you are not familiar with the JSE market research competition, just allow me to explain very briefly what it is. You see, what the Jamaica Stock Exchange is all about is educating the citizens, the individuals, the communities of Jamaica, so that we can make informed decisions when we are investing into a business. It should be a data-driven decision, not something based on gut, not something based on just liking a company based on what they see. And this has always been one of the objectives, the key objectives of the Jamaica Stock Exchange. So every single quarter, what we had were individuals, participants from broker houses, from the media, as well as universities. They were invited to do market research. This analysis is what we would use as individuals and of course as financial institutions to really understand what the market is all about. So each quarter there would be a winner. We're in our final quarter and now we have two gentlemen who will go toe-to-toe. I understand that this market research competition was conceptualized in 2003, but it was just written. But now what we'd like to do is to develop presentation skills, develop oral skills. And so the component of having this oral presentation was added, I believe, in 2015. So I take the opportunity to congratulate our finalists once more, Andre Rumble, Proven Investments, and Chad Anthony Coke from NCU University. Yes, absolutely. Give them a round of applause. They emerged as the top winners. They're the ones who will be going out for this. And I would just like to make a special note about Chad Anthony Coke. I understand that throughout these years, we've never had a university student win a quarter. So I just want to say extra congratulations to Chad Anthony for making it this far and for winning, I believe, the last quarter. So what can we expect? We have some amazing judges who are going to be here to hear the presentation. They have their the different elements that they will be marking for. You know, we're looking at organization, content, presentation, and all of the valuations are given their respective points. Now, for determining the overall winner for the year, each participant will be given 10 minutes to make his presentation before a panel of 4 judges comprising 3 market research committee members and 1 member from the company being reviewed. And if you're asking, it would be the Sagicor X Fund. That was the company that was asked, the finalists were asked to go and do deep market research about. Each presenter will ask 2 questions from their opponents. Each judge will ask 2 questions of the participants. There'll be 2 quick questions from the audience. After the question and answer session, the judges will deliberate while the guest speaker makes his presentation. After the presentation, the chairman will announce the winner of the competition. The presentation of awards will be done to all the participants of the market research competition, including the winner, who will be presented with a trophy and a cash prize. Rich. The winner will make a 3-minute presentation, and of course we will close with our photo ops. So again, we say thank you, and again congratulations to the gentlemen. We cannot wait to hear what their presentations will look and sound like. But before we hear from them, I would like to invite Professor Curtin, who is Market Research Committee, to kindly deliver his presentation, and it will be delivered via Zoom.
Good morning to you all. I trust that everyone can hear me. I would like first of all to thank the Master of Ceremonies for those very relevant and useful introductory remarks. I want to welcome all those present face-to-face, the small numbers who are at the Stock Exchange presently here in Kingston, but more so in addition to those who are following virtually. And here I wish immediately to recognize the significant leadership of the stock exchange within the context of this particular market research competition. I also wish to welcome Dr. Howard Horton, our guest speaker, at today's function. And equally importantly, I cannot fail to mention the two analysts, the two finalists for this year's market research competition, Mr. Andre Rumble from Proven Investments Limited, and Mr. Chad Anthony Coke from Northern Caribbean University, and has been indicated one of the few, if not the first, university person, student, academic, who has made it to the finals of this competition. As the chairman of the Jamaica Stock Exchange's Market Research Committee, I am honored to share with you in this most important event, during which we will hear from our two finalists in the 2020 competition. We will select the winner, and we will also present the awards. I want to remind you that this is one of the most prestigious competitions promoted and developed by the Jamaica Stock Exchange. I wish to express my gratitude to the two past chairpersons, in this case, chairman, Professor Alvin Winch, who's a professor from the department, the Mona School of Business and Management, and Mr. Harry Abrikian, who was a lecturer in that particular School of Business as well. I also wish to thank them most sincerely for their involvement in the successful organization and management of this competition. And as you heard, this competition began in 2003, so it's 17 years old. Our current Market Research Committee, and more broadly the Jamaica Stock Exchange, express our sincere gratitude to all of our colleagues. Ladies and gentlemen, we have a 10-member committee which comprises academics, bankers, investment analysts, media personnel, and entrepreneurs. And this committee truly reflects a positive and productive synergy. The members of our committee are, first of all, Dr. Hopeton Morrison, who is the General Manager of Lasco Financial, Mr. Lloyd Morrison, who is defined as a retiree but is not actively retired at all, and is a market champion in terms of the stock exchange, Ms. Laverne Clark, who is the business editor of the Gleaner, Ms. Rakalia Robb, who is the manager of market operations and trade at the stock exchange, Mr. Lavoy Cruikshank, who is an intern at the Office of the Prime Minister, Ms. Denise Williams, who's the CEO of Financially Focused, Mr. Samuel Parks, who's the manager of the JSE, the Jamaica Stock Exchange e-campus, a very important branch of the stock exchange, Mr. Neville Ellis, the marketing manager of the stock exchange, Mr. Michael Johnson, the deputy business manager of the stock exchange, and Mrs. Bernadette Oldfield Brown from the stock exchange, and she's the secretary of the market research competition. And I would like to thank all of them who have worked as committee members with me, and I'm very grateful for the contribution which they have made to ensuring that the competition is successfully managed and, in fact, contributes significantly to public discourse and public education. Allow me to say also that this can be seen, this competition can be seen within the context of what is called by the Bank of Jamaica financial inclusion, and what I would call also enhancing financial literacy. And one of the things we seek to do broadly is to find ways and means of demystifying, of simplifying the analysis, which is usually presented by analysts in the different brokerage houses. We are seeking to demystify it so that the person in the street can understand and can more critically seek to participate in the activities of the Jamaica Stock Exchange. We would want all persons who are interested in improving their knowledge with respect to stock market activity to participate when these activities are published, and to feel that participation in the stock exchange is not for an elite strata of academics, entrepreneurs, and finances, but for the broad cross-section of the society. Now, what are the objectives of this market research competition, which I have the honor of chairing? First of all, it is to increase the interest and the involvement of analysts and observers in the Jamaican stock market through in-depth analysis of the performance of listed companies. We want to present this in-depth analysis targeting increasing interest and involvement of, in fact, the vast majority of the Jamaican population. We want to ensure that the participants, research analysts, strengthen their presentation skills, enabling them to better understand the market. Very importantly, advise their clients and improve their own communication skills. So this is the second objective, which we consider to be very important to enhance the skills of analysts. Thirdly, we wish to use this opportunity of the competition to encourage listed companies to improve the content and timeliness of the information which they provide to shareholders in a way which is easily understood and which demystifies and financially educates those who are interested, willing and able to participate in the market. Fourthly, we wish to use this opportunity via the competition to emphasize strongly the commitment of the Jamaica Stock Exchange, which targets providing public education on the Jamaican stock market, educating all strata, all those who are participating, and all those who are interested in participating in the stock market to broaden the national awareness and public participation in the stock exchange. We also want to share this benefit of the analysis with the investing public through exposing the public to these market analyses. And we want to ensure that the interest and involvement of the wider public in the stock exchange is stimulated. Specifically, we are concerned to increase the number of participants in the competition. We have sought to increase awareness and to generate interest in this competition via a broad marketing strategy. And we had moved beyond analysts in the brokers' houses, and we have visited our various universities to explain the details, the objectives of the competition, and to attempt to mobilize and increase the interest of students as well as their lecturers. And we're happy to see that Mr. Chad Anthony Coke from NCU is one of our finalists in the 2020 competition. Of course, I need to stress that we need all the support from broker members and those listed companies, and we wish them to become involved as sponsors and supporters of this competition. Their involvement will not only redound to the continued success of the competition and by extension the market, since with more analyses made public, investors will be better informed and well placed to make more critical investment decisions with respect to stocks. I wish to note that we plan to add another dimension to the competition by involving analysts from across CARICOM countries. We want to broaden the competition to make it a regional competition to involve those persons across the region who are interested in participating. And our committee has initiated discussions with selected stock exchanges in the region. Our committee meetings typically review and grade the written presentations submitted by the analysts. I must note and inform you that over the last decade or so, our committee has received and assessed over 300 applications, 300 presentations. Our meetings are analytical, characterized by detailed discussion and objective assessments. And this year, our job has been successful in reviewing analyst presentations, and I'm sure that all of our committee members are satisfied with our accomplishments. As committee chairman, I express my sincere gratitude to all committee members. You have all proven that voluntarism is alive and well. Every quarter, the market research competition invites analysts from the securities industry, tertiary institutions, and the media to submit their analysis of listed companies based on past performance and future expectation. And the committee typically reviews and then suggests companies to be analyzed. For this year's finalists, we have asked them to pay special attention to the impact of the COVID-19 pandemic on the company being analyzed, so that we expect analysts to conduct research, perform analysis, and prepare submissions on the company selected using our guidelines and our format. The company selected this year is Sagicor Real Estate X Fund Limited. A select panel drawn from our committee judged these submissions based on stated criteria, and we determine a winning entry and a runner-up for each quarter. The competition is quarterly. The panel conducts briefings periodically to provide feedback to participants. At year end, the panel determines the top 2 winners who will make final presentations, and has been indicated written and oral for judging to determine the overall winner for the year. Throughout the year, winning analyses are published. Very importantly, quarterly winners receive cash prizes of 100,000 Jamaican dollars. The runner-up of the competition will receive 150,000 Jamaican dollars, and the winner will receive 300,000 Jamaican dollars. In addition, we plan to submit the winning entrants for publication in the print and electronic media. So we are now at the final of the market research competition, where the 2 finalists will present their analysis. Let me inform you that the written presentations, which account for 60% of the final assessment, these presentations have already been graded by our committee. And today, we will hear oral presentations by the analysts, which will account for 40% of the final grade. It is important to note that the determination of the winner, and this sometimes confuses the audience, but I want to make it clear that the determination of the winner is based, A, on written presentation, accounting for 60% of the final grade, and oral presentation, which is responsible for and account for 40% of the final grade. Finally, let me thank all of you who are at face-to-face at the JSE, and I assume the many of you who are following the competition finals via Zoom or other arrangements. I want to thank you sincerely for your involvement. I want to thank the leadership of the Stock Exchange for continuing this, in my view, very important competition, which seeks to demystify stock market activity, purchase and sale of stocks, and to involve the vast majority of the population in this particular process. Again, thank you very much, and best wishes to the finalists.
This is an audio. Oh, look at that. All right. So just for the purposes of the persons who are watching remotely, they may not have heard the round of applause from the very small number of us in this room, but could we hear it one more time for Professor Curtin, Chairman of the Jamaica Stock Exchange's Market Research Committee. Very comprehensive, very extensive, but I think it's important for all of us to really understand all the details and all the layers of a competition like this. Let me also take the opportunity to acknowledge all of the committee members as well as the judges who, because of their roles, they have been able to maintain such high credibility and integrity where this competition is concerned. So we heard the professor say over 300 presentations, detailed presentations were assessed. Many were called, few were chosen. The biggest takeaway from what he said to me, though, was that this will help with national awareness, and that at the end of the day, access to the market, understanding the market, and involvement and participation in the market is not an exclusive thing. It is not an elite thing, but for the broader, wider citizenship. So I thank him so very much. So now we're getting in to the meat of the matter. Are my competitors ready? My finalists are ready? I can't tell if you're smiling or if you're serious because you have on your mask, but I'm assuming you have your game face on. The first gentleman who will be up, and of course I wish him all the best in advance, is Andre Rumble, representing Proven Investments. He was previously employed to Sagicor Bank, and of course the business that we're looking at the market research is Sagicor X Fund. He was previously employed to Sagicor Bank before transitioning to his current role as portfolio officer at Proven Wealth Limited. Within 2.5 years, he has gained a wealth of exposure to portfolio management in providing portfolio recommendations and strategies for pension funds, pooled funds, unit trusts, and managed funds for high net worth clients. He also lends his assistance to the research team by offering meaningful content and analysis for the company's wide clientele. He currently has a bachelor's degree in economics and statistics, first class honors from the University of the West Indies, and he is a chartered financial analyst, level 3 candidate. Additionally, he volunteers his services to the CFA Society of Jamaica in the capacity of deputy chair of the advocacy committee, and he's also a member of the PR committee. Ladies and gentlemen, those here as well as those who are looking, watching remotely, kindly put your hands together and welcome our very first finalist, Andre Rumble.
Good morning, everyone. Can you fix the point, please? Can you hear me clearly? Great. Good morning again, everyone. My name is Andre Rumble, and I will be presenting my findings and recommendation on Sagicor Real Estate X Fund Limited. Sagicor Real Estate X Fund Limited was incorporated in May 2011 in St. Lucia, and the company has 8 non-executive board members, of which 4 are independent. About 80% of Sagicor X Fund Limited is owned across various Sagicor entities, and for short, we can just say X Fund throughout the presentation. Though the company is known for its operations in tourism, as the name suggests, Sagicor Real Estate X Fund is an investment fund, and its mission is to generate maximum returns for its shareholders, and it does this by investing in high quality hotel real estate and commercial real estate. The company's strategy is to diversify its holdings across the Caribbean in various hotel real estate, and this commenced back in 2018 with the investment that the company made in Playa Resorts and Spa, Playa Hotel Resorts and Spa, or Playa for short. Year to date, the company's stock has declined about 15%. However, most of that decline happened throughout January and March of this year, and the company has fared okay throughout the COVID-19 pandemic, and the stock has remained fairly stable after that majority of the fall off within January and March of this year. X1 operates in the tourism industry, as we know, and this is an industry that has been hit really hard along with just the overall hospitality industry from the COVID-19 pandemic. People aren't traveling, people aren't going to resorts, and for the better half of 2020, hotels were closed from March to June, and persons weren't traveling, and persons were definitely not feeling a sense of safety to go out and spend time in resorts. Of the company's competitors, I found there to be 4 competitors among the other listed companies, namely Epley Caribbean Property Fund Limited, Stanley Matter, 138 Student Living, and Kingston Properties Limited. Of these competitors, Epley is the closest competitor to them, given the size of that company's balance sheet and their mode of operations in commercial real estate. However, it must be noted that Sagicor X Fund Limited, among its competitors, doesn't have a pure competitor, as it's the only fund on the stock exchange that is heavily invested in hotel real estate compared to the competitors. So now that we've had a look at the company overall, let's take a look at the inner workings of Sagicor Real Estate X Fund. And I'll do this by looking at the financials. So between 2017 and 2019, the company's revenue fluctuated, and overall it fell about 15% between 2017 and 2019. For the income makeup of the fund, the main sources of revenue were hotel operations and the net capital gains from assets and liabilities that the company owns, mainly through its ownership at the time in the Sigma Real Estate portfolio. Expenses over the period increased by about 25% between 2017 and 2019, and the majority of the expenses were dominated by admin expenses, direct expenses, and other operating expenses. Finance costs, I must note, declined by 49% over the period. And the majority of this decline came in 2018 when the company paid down debt of about $11 billion that happened around the same time when the agreement was made to do the acquisition in Playa. The total assets for the company over the period increased marginally by 3.2%, but the majority of the company's total assets were non-current assets, and understandably so. The company has a large collection of hotels and commercial real estate that it holds either directly or indirectly through its investment in Playa or the holdings in the Sigma Real Estate portfolio. Liabilities over the period declined by about 49%, and this was mainly due to the majority of debt that I mentioned earlier that was paid down in 2018. So that was the past 3 years. But how about the first 6 months of 2020? And oh boy, a lot has happened in 2020. The COVID-19 pandemic handedly took a dramatic hit to the company's revenue because persons weren't traveling, persons weren't going to hotels, governments were closing borders, and most hotels were closed throughout that period. The company saw revenues fall by 51% year over year for the 6 months in 2020 compared to the 6 months in 2019. And the hotel revenues for that period, there were hotel revenues in 2020 quarter one, but for the majority of quarter two, there were barely any revenues as the majority of the hotels for the company were closed throughout that period. So after taking a look at the company's past performance, I went ahead and did my analysis on the projections for the company going forward and how it plans to weather this COVID-19 atmosphere and come out victorious. I utilized 3 valuation methods to arrive at my decision. I utilized the residual income valuation, the price to book valuation, and the relative valuation. After consideration and analysis, I arrived at a fair value estimate of $5.11 for Sagicor Real Estate X Fund. The company, based on that valuation at the time, would be overvalued by approximately 35%. But notwithstanding that, despite this overvalue of 35%, and the company projected to make losses over the next 3 years by my estimations, the losses are projected to be progressively less each year, and the company holds a strong brand equity portfolio of hotels regionally that has the capabilities to attract new and repeat guests. Additionally, creating an atmosphere or an experience of safety will be paramount for Sagicor X Fund Limited to rebound from this COVID-19 pandemic, and as the preferences of individuals change and their mode of going out to enjoy resorts. The company has undertaken several initiatives, one including the Playa Stay Safe initiative, which utilizes preventative antiviral measures that helps to keep their hotels in the pristine condition of cleanliness and help to reassure guests that their stay there will be a safe one and they'll be in an atmosphere of safety and sanitization. But with all that said, ladies and gentlemen, who is Sagicor X Fund Limited stock for? Who should invest in this stock? Well, firstly, it's for the investor with a medium to high risk tolerance, and also an investor with a medium-term horizon, investment horizon that is. And additionally, and even more importantly, it's for the investor that can ride out the market shocks as this company finds its new footing in this new land that we're in and this new experience for the guests that will be visiting the company and its resorts. And with that, I am recommending a hold on Sagicor X Fund Limited stock, given the recommendations and the findings that I have found. Thank you, ladies and gentlemen, for your time, and I hope that you did find this insightful and equally as enjoyable. Thank you.
You guys can do a better job than that. Thank you so very much, Andre. And I'm going to tell you what, it's never easy being a finalist in a competition, and it's never easy going first, because basically you become the guinea pig, you set the trend, you set the tone and the precedent. Well, let me say on behalf of everyone here and those who might have just joined us that you really started off very, very well, and we thank you for the time that you took to present. For those of you who might just be joining us, you would have just seen our first of 2 finalists, Andre Rumble, who is a part of the JSE market research competition. We want to remember each finalist has 10 minutes. The judges are looking at the oral presentation, organization, content, as well as presentation. We heard from the chairman earlier, Professor Curtin, who also said that the written part of their analysis has already been assessed. Therefore, all they're going to assess right now is the 40%, which is the oral presentation. So thank you again, Andre Rumble. That was a fantastic presentation. We now make way for our second and final finalist, Chad Anthony Cook of NCU. The Jamaica Stock Exchange congratulates NCU final year student, Mr. Chad Anthony Cook, on winning the JSE's 2019-2020 fourth quarter market research competition. And the reason why he's getting a special shout out is because over the past 17 years, he's the only student to have won a quarter, much less to have gotten to the final. So that in itself is a huge accomplishment. Mr. Cook is a final year business administration finance student currently studying at the Northern Caribbean University, or NCU. His career aspirations are geared towards investment research and banking, as well as asset management, and he is passionate about the financial and capital markets, macroeconomics, and alternative investments. Along with his career goals, attaining the Chartered Financial Analyst, CFA, and Chartered Alternative Investment Analyst, CAIA, designations are also objectives of Mr. Cook. Ladies and gentlemen, those here and those who are watching remotely, kindly put your hands together as we welcome Chad Anthony Cook, our second finalist.
All protocols being observed by the host, Territorial Read. Good morning, and thank you for having me. And thank you for the panel for the confidence placed in me as the fourth quarter winner and as a finalist for this competition. Having reached thus far, it is indeed humbling, and I'm extremely grateful for it. Without further ado, let's get started. As you already know, the company I mentioned is Sagicor Real Estate X Fund Limited. The company's core focus is tourism and commercial real estate related activities. It is primarily owned by Sagicor Pooled Pension Funds with a 52% stake. It's an associate stake of Sagicor Group with 21%. It is owned by Sagicor Unit Trust, Sagicor Segregated Funds with an 8% ownership, and the investing general public owns roughly 20% of X Fund. Going into the company overview, as you may or may not see, X Fund Properties, which is a wholly owned subsidiary of X Fund, owns the Jewel Grande Montego Bay Resort. I'm sure you all guys have been to that resort, and you might have seen it before. You also have X Fund Properties LLC, LLC being a limited liability company. This is incorporated in the USA. It owns the DoubleTree by Hilton assets, which is located in Orlando, Florida. It is in proximity to the Universal Studios and the Walt Disney Parks in Florida. You also have Jamziv Mobe Jamaica portfolio. This owns a 15% stake in Playa Hotels and Resorts NV. The NV means that this company is incorporated in Netherlands, but they are listed on the New York Stock Exchange, NYSE. And as you are seeing, the wholly owned subsidiaries of X Fund are X Fund Properties Limited, the X Fund Properties LLC, a 61% stake of Jamziv, the same Jamziv that owns 15% of Playa, as well as a 3% ownership stake in Sagicor Real Estate Sigma portfolio. This is how the company derives its ownership in commercial real estate related activities by owning a 3% stake in Sagicor Sigma Real Estate. And as I mentioned earlier, the 15% ownership stake through Jamziv Mobe, the company owns 23% of Jewel Grande Montego Bay. Playa owns the remaining 77%, and a 100% ownership of the DoubleTree by Hilton, as I mentioned earlier, in Florida, USA. A brief oversight of Playa. as it's not listed on the JSE. It's listed on the NYSE, as I mentioned earlier. It owns and operates all-inclusive resorts across the Caribbean, Latin America, namely Jamaica, Mexico, and Dominican Republic. Some of the resorts in Playa's portfolio, these are just a few, they're not all. It's quite extensive, as you may see. Hyatt Zilara, Ziva, Playa del Carmen, Hilton Rosal. This was previously owned by X-Fund. It was sold to Playa. I'll mention that further in the presentation. The Jewel, Paradise Cove Beach, Runaway Bay, Duns River, and the Hilton La Ramona. So name a few. X-Fund, through its 15% stake ownership in X-Funds, owns all of these resorts. It's an indirect ownership, not direct, through its 15% ownership. Now, X-Fund sold its Jewel resorts to Playa for an ownership stake in Playa in 2018. I believe this transaction took place in February. It was completed in June, as these things do take time. And as you may see on the PowerPoint, there's a pun intended that X-Fund did sell its Jewel portfolio. The reason why the pun is intended because I believe that X-Fund was doing quite well before they sold the Jewel portfolio to Playa. I will mention that later in the presentation. The 15% stake owned by X-Fund involves 20 million ownership shares at a US price at the time in 2018 of $10.77 and a 100 million upfront cash payment. This $200 million ownership stake was done in tranches, so that's why the $100 million US cash payment was necessary to carry the deal forward. And as you can see, the Jewel Grande, which is a majority stake that was sold to Playa, being 73% of the company. Paradise Cove, Runaway Bay, Duns River Beach, and Hilton Rosal were all sold to Playa. And as I said earlier, in return for selling the Jewel portfolio to Playa, X-Fund demanded that they own a 15% stake in Playa because X-Fund wants to diversify its operations by owning indirect stakes in other companies. Playa is the first. I believe the company could have done better in identifying opportunities. I'll get to that further. And these are the branding of the hotels that are owned by Playa and indirectly owned by X-Fund as well. Now, as we all know, COVID-19 has taken place since the start of the year. The onset of COVID in Jamaica was in March, and since then it has been a precipitous decline in the tourism industry. The hotels were previously closed for a while. I believe it was almost 2 months. If you can imagine, if a hotel is closed for 2 months, no revenue coming in, due to the nature of the virus, its unique nature that it spreads easily. Governments are recommending social distancing, stay at home, don't go out unless it's absolutely necessary. Clearly, you saw that cutback in discretionary spending being optional spending for persons to go out and go to a hotel, take a vacation, and do leisurely activities. X-Fund wasn't the only company affected as well. Playa was affected through Playa's impact from COVID. X-Fund was affected. And it has to be borne in mind that this was a worldwide pandemic, so every single tourism industry for any single country and every hotel operant in those countries were affected. The Jamaica borders were closed, so that limited arrivals and departures of citizens in Jamaica as well as tourists. And as you can see, that X-Fund and Playa caught the virus because, as I said earlier, these properties were closed for 2 months before a phased reopening on recommendation and in negotiations with governments to say we need to open back up. People are being laid off. These people need to make a livelihood. We need to get back on track. And there has been some compromise there, and we are here thus forward. The impact on the economy, specifically the Jamaican and the US economy, the decline in GDP being indicative of economic growth, declined by 18.4% in the third quarter of this year, third quarter being the April to June quarter. As I said earlier, the onset of COVID was in March, so the full impact on the virus would have been in that quarter where you saw the people being really strict in adherence to the policies being enacted by governments as well as for their own safety.
I should have mentioned earlier that COVID is what is mentioned as a black swan event. It's something that you never seen before. When it happens, it has severe consequences. Seeing that we haven't seen COVID before, we now know how to act because we adapt new information as they come by. You yourself would have seen that the government would have been acting on new information for the past, which has been now 8 months. So it's an exogenous event, a black swan event. It's not something you planned for, it's not something you've seen before. It's just unfortunate the impact it has had on the economies, on the tourism industry specifically, as well as families as well. The hotel and restaurant sector of the Jamaican economy declined by a massive 86%. I believe this is unprecedented. The tourism industry has never seen this impact before, unless they were measuring statistics before the Great Depression, which there wasn't. So this is the first time we have seen this type of impact on the economy. The US GDP declined by 31%. As I said, this is the worst since the Great Depression. COVID's impact has been likened to the Great Depression, and it's now been called the Great Lockdown. As you know, with the stay-at-home orders, not going out. I want to specifically mention that because of the impacts of COVID on the economy, on X-Fund, and the broad economy and other countries, there's a long road to recovery. It might take at least 3 to 4 years. Really and truly, the economists, they're saying a lot of things. If you ask me, it's a bunch of noise. No one really knows what's going to happen from here. As I said, we adapt information as they come by. In my estimation and my reasonable assumptions, it will take at least 3 years for Jamaica to recover. From COVID, it's going to take X-Fund longer to recover. You are now seeing a big word in red, means sell. I'm advising all investors in X-Fund, particularly retail investors, to sell your holdings in X-Fund. Why? Because it has little to no benefit for the quote-unquote small investors. I'm using the word small investors because people like myself, I can classify myself as a small investor. You normally buy in increments of 500s and 1,000 share amounts. If you have that amount in X-Fund or more, it literally means nothing to you based on the share price movement, which has been thinly traded because of the onset of COVID and before COVID. There's not much interest in the company for whatever reason. I will explain later in the presentation. The benefit of X-Fund really is for the, as I mentioned, the Sagicor group and the Sagicor pension funds. If you look on Sagicor's balance sheet, which is not in this presentation, but if you do look in the financials, you see the finance costs, the interest costs paid on preference shares and borrowings that X-Fund has. That's the only benefit to the institutional investors, being pension funds, such as Sagicor, I can say Scotia and Proven to give an example. That's really the only benefit to the quote-unquote investor. Of note, which is quite surprising to me when I found out that the company has not paid any dividends since 2017. COVID wasn't here in 2017, but because the company was having challenges in 2017, made it worse in 2018 by going into bed with Playa, quote unquote, and they haven't paid a dividend since, and they certainly won't pay a dividend because of the impact of COVID. So the quote unquote small investor who wants dividends from their investment, you won't get it from X-Fund. So you might have to look elsewhere. And as I said, and as you can see here, X-Fund was suffering before COVID. It will continue to do so after. Recommendations I have, if you really want an interest in X-Fund, you might try to, I want to use the word, swing trading. That means you buy a company at one price, and later in a week you try to sell it. Alternative options, I believe, the X-Fund are Pandem Investment, Epic Caribbean Property Fund, and First Rock Capital. I'm recommending to all investors who are listening to my voice to sell X-Fund at the highest possible price, take advantage of other opportunities in the stock market. Thank you very much for having me. Thank you for listening. And that's the end of my presentation.
Thank you. Thank you so very much, Chad Anthony Coke. Very different styles, very different deliveries. I hope we were really really listening to what it is that they were presenting, because they were asked to not just analyze and to research, but to also simplify and communicate and project value, performance, and market, not just about the business, but in terms of going forward. So we just want to again congratulate the two gentlemen who were just the finalists. We will give the judges, of course, time to assess the presentation, oral as well as the written portion that was already assessed, 60%. But at this time, we're going to permit the finalists the opportunity to ask or pose a question to each other. Therefore, I'm going to invite Andre Rumble as well as Chad Anthony Cook to the stage. I'm going to give Andre Rumble the opportunity to ask his first question to Chad Anthony, and then afterwards we'll ask Chad Anthony to pose his question to Andre Rumble, after which we will head to the judges.
Good morning again, everyone. Chad, firstly, great job on your presentation.
Thank you.
Thoroughly enjoyed and was very insightful as well. My first question to you is, I'd just like to find out what valuation methods you use to derive your fair value price.
Okay. Well, it was mentioned in the presentation for time and simplicity reasons, but the method I used was the price to book. You use that method as well. I use that method because X-Fund has negative earnings, so you couldn't use the price to earnings method. They haven't paid a dividend. Yeah. So as I said, they haven't paid a dividend since 2017. I couldn't use historical dividends to try to discount those dividends to find the fair value. I couldn't, well, I saw you use residual income method. I was having difficulty using that method because of negative return on equity, as well as lack of dividends paid. I chose not to use discounted cash flow method because of, uncertainties around COVID and the company, as well as negative free cash flow. And so I just used a price book. I thought that was the most suitable method. It was compared to the real estate sector average. X-Fund's price to book is 0.82, which is about 27% higher than the average, which is 0.77 times. So X-Fund is overvalued on that metric. So that's why I was recommending a sell recommendation as well as the other reasons why in the presentation. So my question to Andre is, what variables did you use for the residual income method?
Can you hear me? Great. All right, so for my residual income valuation method, I projected the equity for the company over the next 3 years, and I also projected the net income based on my projections of the income statement. So though the income is projected to be negative, it's still marked against a positive equity base that the company had in 2020. And though the equity value based on my projections, the overall residual income that is left, which would have been the initial book value or the equity of the company minus the discounted residual income for the 3 years ahead, which would have just been the residual income for each year discounted back to the current year, which is 2020. So the overall residual income at the end, which is the sum of that positive residual income value and the negative values that will follow, I was able to derive my fair value estimate using that method.
Okay, okay, fair enough. I can see the variables. Thanks.
May I just take the opportunity to say that if ever there should be a competition, a debate, certainly this is the manner in which it should be done. Where two individuals, am I being shady? Am I being shady? where two individuals can come and present their points after coming to their own conclusion and yet still display a certain level of sportsmanship and respect for each other. And I want to say, gentlemen, that we're extremely impressed, not only by your ability, what you're able to do, what you're able to communicate, but certainly your soft skills, your work ethics, and how you treated each other, and the respect that you showed each other really speaks to your character and to your core values and your principles. And we just want to say thank you for the sportsmanship and for just the amazing, the impressive presentations that you have done today. Do you agree, ladies and gentlemen? And for those watching remotely, certainly you can drop your comments if you're allowed to drop your comments, and certainly big them up, because this is what our present and our future looks like. So we heard the contestants, the finalists, pose a question to each other. And now we give the judges their opportunity to pose questions as well. We do have the roving mic that is at the judges' desk, and it's over to you.
Yeah. Good morning.
Good morning.
Andre. Yes. My question was, why would you recommend buying a stock that you calculated was overvalued by 35%?
Thank you for that question. And my reasoning behind holding the stock is because I believe that over the next few years, the company has the capabilities within its holdings of hotels, both locally and regionally, and the initiatives that the company is seeking to do, along with the intention to diversify into other areas of real estate, that this could be an opportunity. If you already hold the stock, given that it's already thinly traded, you would not take on that market impact per se, but you would be able to ride out the shocks. And as well, if you suit that being a medium to high risk investor, along with someone that has a medium term horizon, that can wait it out. So that's the conditions that I would recommend. If you fit those criterions, then you can be an ideal person for X fund stock.
Okay. Chad Anthony? Yes. Yeah, all right. So this question is sort of a trajectory. So you commented that the X fund was better off before the player deal. You also commented that X fund was suffering before COVID. So I wanted to find out what you would have done to improve the player deal, because I think time didn't allow you to explain that.
Okay, so if you look on the precedents between when X fund was listed in 2013 up until 2017, you would have seen positive income, positive cash flows, a decent enough strong balance sheet. I said I was not a fan of the player deal because, and I might get a little technical here, normally that deal, when you do it, you're buying the common shares of player at a price, you account it on X fund's book as financial fair value through profit and loss. What was the situation in 2017 and 18 after the deal is that because of the increments or the movements in player share price, and I'm going to explain why that is so, is because when you account for financial fair value through profit and loss, you're using the market price of a security. That market price is the player's share price, which is listed on the stock exchange. It's readily available. It's there. So what X fund do, I'm telling the process, at the end of each quarter, whatever player share price is, they would say, okay, this is the price, this is the amount of shares we have, that's the fair value. And X fund's income would fluctuate based on whatever player share price was. The shareholders wasn't a fan of it, and they complained at the AGM of 2018. The reason why, as I said, they were complaining because of the fluctuations. What X-Fund did, which is I'm not necessarily a fan of, is that they account for Pliers an associate stake. As far as I'm concerned, based on accounting knowledge learned at school and reading financial statements, you account for an associate when it's more than 20%. You account for a subsidiary when it's 51%. If it's a joint venture, it's 50-50, 51-49, the list goes on. As I said in the presentation, and you would have seen reading my report, X-Fund owns 15% of Playa. Now, X-Fund kind of did some accounting maneuvering to say that we can account for it as an associate because we own 50%, which is near the 20% threshold, as well as having Peter Melado and Christopher Zaka on the board to say we have a say in how the business run and what happens because we have the stake. As I said, I'm not necessarily a fan of that tactic, lack of a better word, because as far as I'm concerned, associate stake is 20% or more. So I think that's setting a precedent to say that a company can buy, let's say, 10%, and you put 3 directors on the board and say, well, we now have significant control of that company. I think that's setting a precedent, which is kind of maneuvering accounting use per se. So that's why I did say I wasn't a fan of when they quote-unquote got into bed with Playa.
All right, since you're at the mic, Chad, my question to you, based on your evaluation on the corporate governance of the firm, how did it impact your assessment of the current and future performance of the company?
The corporate governance didn't really impact my assessment of the fair value of the company. I think it is in adherence with corporate governance guidelines. The directors and the management has experience in what is needed to run the company, in my opinion. Through its associate stake in Playa, I think Playa's board has significant experience in tourism management and how to run hotels. So I don't see a problem with corporate governance. I didn't affect my valuation of the company now and going forward.
And a follow-up in terms of the number of females on the board. Any comment on that?
If I remember correctly, I don't think there are any females on the board. The only female is the managing director, Brenda Lee Martin. I think they could improve on that aspect. Maybe. I think there are a few women who know are knowledgeable about real estate and would be willing to serve on X-Fund's board or at the management level. So I do think they could improve on that, as well as the paradigm shift as to being more inclusive of women on boards.
We are still per participant. So the follow-up would not be qualified as a second. But the other part of your presentation indicated your challenge based on the fact that the company did not pay dividend over the last 2 periods. But we know that total return is a summation of the capital gains plus the dividend yield. So you were not expecting from the capital yield perspective, based on your evaluation of the future cash flow generating capacity of the firm, was that a part of your evaluation?
Yes, so the only return shareholders would gain with our pension funds, institutional investors, or retail investors would have gained is from capital gains or capital appreciation. The 52-week low, I believe, was around $5. The 52-week high was around $11. So anyone holding X-Fund within that time period would have had capital gains. But as of late, before COVID and now more because of COVID, it has been trading within a band of $7.50, $7.90. There's not much cap gains there, which is what I was mentioning in the presentation, that if one investor wants to do what's called day or swing trading, where you say you buy X-Fund, let's say at $7.90, which is the current price I saw it last at, and it goes to, let's say, $8.20, the difference between $7.90 and $8.20, you could have sold and take advantage of gains, because you won't be necessarily expecting, what's the word, a large cap gain increase based on the interest of the company and the investing public not really having a general interest in the company because the stock is thinly traded. One has to bear in mind that pension funds aren't going to readily sell their shares in the company because that can impact the share price significantly and the market. So normally when the stock trades, it's in small increments, sometimes 50 shares, 500, 1,000. And based on that share amount, you can tell it's a retail investor.
Hi, Chad. I think it was Denise's question. I want to follow up on the question about how Sagicor X Fund is represented on the financial statements. Sagicor, you said it is represented as an associate company. Sorry, Playa, thank you. Now, there are accounting standards. So I'd like to find out, and for the benefit of the investors, if it is that the directors, you think that they are doing something that is inappropriate, how would you represent it? And what would your alternative be?
The alternative, I believe, would go back to the president, which was accounting for the company as financial fair value through profit and loss. I mean, well, doing that would go back to where they came from, where the fluctuations in Playa share price would impact the net income of the company significantly, which it was doing before. The thing with Playa, the share price is quite volatile. There's more liquidity in the US markets, so there's more volatility in the share price. So that also increases the capability of the income being impacted significantly. And since COVID, if you want to talk about precedent, Playa's share price moved from $4 to as low as $1. So let's say that the company still accounted for them to fair value to profit and loss. I can't really speculate to what income might have been, but you can imagine how bad that would have been and how shareholders might have reacted to it. So that's why they did take that initiative to account for it as an associate stake, which really to me isn't an associate stake, but they will tell it is. But that's just my opinion. I think that answers the question. I would account for it as fair value to profit and loss, but I don't think they'd be too keen on that.
Thank you. I'm allowed to ask Andre. So I'll ask you, Mike, no, Andre. Chad, my apologies. This is Andre.
Yes.
Right. Okay. When the X Fund listed on the Jamaican stock market, it came to the market, I believe, at $5?
That's correct.
Right. Would you consider the current price a reasonable price for a long-term investor? And do you consider it to be a growth stock, or would you consider it to be an income stock?
Thank you for that question. So given Sagicor X Fund's current price of around $7.90, and where it came out at about $5, it's also it's not completely reflective of everything that happened, because over the years, Sagicor X Fund's price has gone up to about $10, $12, probably $14, but the company has undergone a lot of structural changes throughout the period. And even now, the company is still going through structural changes, trying to find a new way of operating both locally and regionally. And going forward, though I don't project the company paying any dividends, I think that it is a stock that isn't necessarily a growth stock either, but it's somewhere in the middle of, if you already have it and you fit the criteria of a medium-term investor with a horizon and a medium to high risk profile, that's a stock that you would want to hold on to instead of trying to take the market shocks that will come if you hold a sizable portion. And even if you hold a small portion, the stock is still traded. So you trying to exit a stock like that in this current pandemic may be to your detriment than to your benefits.
I'm sorry, it's not a different question, but what I want to be clear with you is, do you consider X fund a long-term investment? If we want to just say a long-term stock? I'm asking the question for investors, you know. Is this a stock that you should be looking to speculate with? Or is it a stock that you should look to buy and expect some appreciation over the medium to long term?
Well, I believe that investments overall should be long-term because we get the greatest benefit from investing over time. Because there are many fluctuations that will happen in the middle, but over time, I believe that investing should be for that period. And additionally, I also believe that Sagicor X Fund Limited is a long-term investment because you should be able to ride out the market shocks that will come over the next few years because we're still in the early stages, I consider, of the pandemic and just how persons' preferences are changing. So I think it's a long-term investment and something that wouldn't necessarily just want to jump in and jump out of, also because it's still traded, but just for good practices, it helps to have a long-term view when you're doing investing.
Mr. Rumble, my question to you may be similar to the one you just answered, but I want to view it from a different perspective. So evaluating the firm, and if it is deemed fit that the firm will continue as a going concern, operating perpetual into the future. And I know from your valuation metric that you presented, you did not critique the free cash flow to equity methodology, whereby based on the fact that you do not expect a dividend to be paid, then another valuation metric would have been the free cash flow to equity, which basically is defined as the cash available for distribution if the firm deems to distribute it sometime. And then that would be able to effectively inform whether we think that in the long run that it would be a good investment. Now, you, in carrying out your evaluation, what was the rationale, if any, why you chose not to utilize the free cash flow to equity?
Thank you for that question. So it wasn't a case where I decided that I didn't deem it suitable. I believe the free cash flow to equity would have been a suitable valuation method as well. But I also believe that the valuation methods that I chose were also very suitable, given the nature of the business, the stage that they're in currently, and where I see the company going over the next 3 years. So I didn't select the free cash flow to equity. The free cash flow to equity valuation, I didn't believe it was suitable. I just chose other appropriate methods of valuation.
If I may do a follow-up, but the method of valuation that you chose, especially with taking into account the impact of the pandemic, COVID impact, it means that the valuation metric that utilizes the historical performance in a black swan occasion would not be prudent as much because you have to take into account the increased uncertainty and the innate risk that the firm will be exposed to in a black swan event. So being able to carry out effective risk analysis, imputing that, so if you're saying the impact of COVID might be over the next 2 years, to discount the revenue stream that is expected for those 2 years. If you expect the firm to rebound in year 3 and onwards, evaluating it over a 5-year future forecast, So you'd have imputed the impact on the first 2 years, take into account any rebound in years 3, 4, and 5, then finding the present value to then effectively evaluate from the going concern perspective where you see the firm in the long run. So therefore, if the recommendation is a whole, then you would say, even though the impact over the first or the next 2 years based on COVID would have a negative downside to the performance, but based on the expectation and the possibility of rebound, then that is why you would recommend your position.
Thank you for your suggestions, and I'm in agreement. And I also believe that the residual income model that I chose it captured many facets of the suggestions that you were making just now, because it captures forward-looking net profit over the next 3.5 years, and it also captures where I see the equity base for the company will be over that period. So with those projections marking against where the company currently is, I believe that the residual income model was a suitable method that captured most of the suggestions that you were making. And I also believe that it was a prudent measure given the next 3.5 years that I decided to project out for the company, and just how I believe the rebound will take a phased approach going forward.
Okay, my question is for Mr. Coke.
Sure.
Yes. So I'm pulling from Mr. Rumble's position that X fund is a lot, well, you should invest for the long term. But you mentioned swing trading, in which investors could look for an exit at a particular price. So, my question is, within this COVID period, are you more in the favor of investors who feel nervous about the stocks that they hold to try and swing trade, as opposed to buying and holding for the long term? And just give me an idea of where you came to the position of swing trading versus long-term holding.
Okay, so I should also agree with Andre's point that stocks and equities are long-term by nature and in duration. It tends to perform better over the long term. The reason why I recommended swing trading was to say, if an investor, I can use Andre as an example, if he says he has an aggressive risk tolerance, because I believe trading should only be suited for investors with a high risk tolerance, and Andre has capital to deploy, he can say, all right, maybe I can speculate on this company and see what I can get out of it. Granted, though, I did recommend that there would be some difficulty because of the illiquidity. It's thinly traded, which is compounding to the fact that it offers little to no value to shareholders, particularly the retail shareholders. And I'm only recommending swing trading if you really, really want to get something out of X fund per se. And I should have also said that, though I did say so, some investors might have some difficulty actually exiting their position in X fund, because as I said, the stock is still traded. And further to your question, I'm only recommending swing trading to investors in a COVID-19 environment. If you have an aggressive risk tolerance, if you have the knowledge about how the markets work and you know what you're doing, that's the only way I recommend swing trading or day trading. And I don't recommend X fund as a long-term hold, because I think there are better opportunities out there, particularly in the real estate sector, such as Panjam, Epley, and First Rock, which I mentioned in the presentation. I would not recommend any retail investors to take a position in X fund now or in the next 5 to 7 years, until the position, the situation in Playa improves, where Playa's profitability improves, thereby X fund profitability improves, and you can now see the benefits of the quote-unquote marriage that happened in 2018. We haven't seen it yet, but if investors really, really want to wait and see what happens, then they can. It's not something I recommend, because there's opportunity cost of buying other shares. Capital appreciation and dividends from those opportunities that you might have taken advantage of. So I don't recommend X fund as a long-term or short-term buy.
All right. Thank you, gentlemen. Thank you. Hold on, don't move yet. Thank you so very much, gentlemen, for accepting and answering all of those questions and follow-up questions. At this time, is there anyone in the audience who has a question that they think may add value to the debate? If not, then we'll of course go to the deliberation process. Any questions? Going once. Any questions from any of our viewers online? Going once? Going twice? All right, gone. Thank you so very much, gentlemen, and I wish you all the best. The person who wins walks away with $300,000 JMD, and the person who comes in second prize walks away with $150,000 JMD. Whoever it is, I'm your best friend. We've known each other forever. We'll be in touch. Ladies and gentlemen, give them another round of applause, please. I think these gentlemen did a fantastic job. Now, as the judges, and I believe the chairman had said it earlier, the judges would have already gotten their written presentation, which was valued at 60%, and the judges only had their oral presentations to deliberate, but we're going to give them that time just to make sure that they got it right. So in the meantime, we have an esteemed gentleman who we are honored to have as our guest speaker. He is Dr. Howard Horton, and he holds a PhD in mathematical computer science. Let me repeat that again, a PhD in mathematical computer science from Wolverhampton University, where he read for a BSc from Teesside University in mathematics, statistics, and computer science, and is a fellow in the Institute of Mathematics and its applications in the UK. In addition, Dr. Horton was awarded the Security and Financial Derivatives qualification in the United Kingdom and has read for a master's level qualification at Oxford University in financial strategy, at which he obtained a distinction. Our guest speaker is also a certified treasury professional awarded by the Association of Finance Professionals. He has 20 years of working experience in banking and finance, as well as other disciplines including engineering, and is currently the managing director of a boutique finance and risk management consultancy based in the UK and Jamaica. He is recognized as a world-class expert in finance and has conducted numerous consulting and training assignments internationally. Finally, he has held executive roles within risk and capital markets at regional institutions in the Caribbean and senior roles in institutions including Merrill Lynch, Deutsche Bank, Dresdner Bank, and JP Morgan. He has written many papers and books in area of mathematics and its applications, and has research interests covering corporate governance, risk management, asset valuation, securitization, and portfolio optimization and management. Ladies and gentlemen, kindly welcome our esteemed guest speaker for this morning, Dr. Howard Horton.
Thank you very much. Can you indicate if you can hear me, everyone or anyone?
Yes, we can.
Excellent. Thank you very much.
No problem.
Okay, great. That's a great introduction. I must thank the JSE. Whenever I give a talk for the JSE, to have that individual present, or at least invite me to talk, that was very, very good there. I couldn't believe everything that she was saying about me, though. It's amazing. What I want to say is good morning. I still believe it's morning in Jamaica. It's roughly the evening here in the UK. Just want to say, second of all, it's been a great presentation so far. I've enjoyed the discussions. It's been very, very good. Very interesting. I wasn't entirely sure what the two speakers, individuals were going to talk about, but it was very, very interesting, and the discussions have gone well so far. When the JSE asked me to be a guest speaker and give a talk on the subject matter of preparing research material for the average person, I thought about it for 2 seconds, and I said, well, I can't really speak about the average person because I don't know who the average person is anywhere, let alone in Jamaica. So having said that, I thought that if I were writing or preparing research material, what would I do? Well, perhaps what I do is understand a bit about the the kind of individuals, not individual, but individuals that would read that research report. And hence, I would think more holistically or wider than just thinking about an average. I think about a range of different types of individuals. So, in other words, I'd want to know who could possibly read that research work. So I'd have to, in a sense, I'd have to understand who my client or my customers are, who are the recipients of this information that I'm producing. I have to think about my assumptions. And one of those assumptions is actually not to think about the average individual. A third point here is there are certain key things that I think you need to have in every research report. And I'm going to quickly go over those, and I'm going to end on thank you. So why do I need to know my client? Well, I think if you don't have a good understanding as to who's going to read the report and what their risk tolerance, I heard that word earlier, what's their risk appetite, what are they looking for? In other words, your client's potential or actual needs, then your research could actually be missing the mark. I think it's important not to assume that individuals will be rational, which is to say that not everyone will act in the same manner, under the same circumstances, and think the same way. Now, according to UNESCO, which is a UN body, Jamaica has a literacy rate of around 88%. For men, it's around 83%, and for women, it's much higher at 93%. In a sense, what that suggests to me is maybe, you know, the presentations or the research material should be aimed at females, given that they clearly understand things a lot more than men. Or perhaps what we should do is not produce for the average person, because there clearly isn't an average person. So we should be careful about how we write the report, but also write it in such a way that it is appealing to both men and women at the same time. We also have to be careful about what we put in a research report, because reputation, or at least the reputation of the person producing the report, it might have taken a while to build that reputation, but a badly written research report, in my opinion, and I've seen some, a badly written research report can actually destroy your reputation somewhat. So be a little careful about what you put in a research report. Specifically, I have in mind information which is knowingly misleading, certain sell or buy indicators with no particular rationale, but simply because there's a conflict of interest. So I think it's important to understand that, you know, your reputation's on the line when it is that you're providing something, and so you should provide wholly accurate information in your reports. So I mentioned earlier that I struggled with this concept of, you know, what is the average person? So I decided to, or I concluded that there is no such person. So don't think average. So your market research might in fact need to convey some educational aspects. So it might be that there's certain things that you need to explain. And it may be obvious to you, or it may be obvious to the other CFA individuals who might read the report, but it may not be so obvious to the so-called average person, whoever that person is. So it's important that things are spelled out, even if it's vacuously clear to you. Don't assume that everyone understands what it is you are saying. In particular, given some of what has transpired today, I would say in relation to valuation methodologies and the impact that different valuation methodologies could have on the overall value of a company, or the equity price if you're just looking at the price of the share. When we think about the future, and again, I heard quite a lot of discussions about future cash flows, etc. So when we think about what could happen in the future, so prospective analysis should really take into consideration scenarios. It's okay doing a sort of midpoint or a single point estimate, if you will, as to what the plausible cash flow in the singular will be in 1 year, 2 years, 3 years, etc. But it makes a lot more sense, especially if there's a certain amount of uncertainty, as there clearly will be. In fact, certainty given COVID-19 is exacerbated, so one would expect there to be quite a few different kinds of scenarios. Beyond scenarios, one might actually think of looking at probability distributions, perhaps, and looking at confidence intervals as to the likely cash flows rather than a single cash flow. So a good researched piece of work wouldn't just provide point estimates, but would also look at scenarios. Given that you're trying to convey this to a variety of different individuals who have perhaps different learning styles, it's kind of important that you use different means of communication. So for example, it may seem obvious, but tables and charts and use what I call simple language. Simple for A may not be the same as simple for B, but try as you must, try as hard as you can to try and use simple language to convey your thoughts and your opinions about the research that you have produced. Most importantly, and I think this is often missed out or often misunderstood, one should avoid using valued judgments. So I guess at the end of the day, you're gonna have to make a judgment or an assessment about whether this is a buy or a sell, but that need not be a valued judgment. So it should be based on information which can be quantified, and the conclusion as to whether you buy or sell should really follow from the facts as presented in the documents rather than it being valued judgments. May seem obvious, but I think a lot of folks tend to forget this. So here are some things not for you to forget, or don't forget to mention, as it were. I heard earlier some discussion about different valuation methodologies. X-Fund, for example, hadn't paid a dividend since 2017, I believe it was quoted. So it may well be, for example, that you're looking at a stock and there may well be the potential for the stock to pay a dividend, may not, depends on the type of company or organization you're looking at. Or it may be that this is a growth stock or possibly a combination of the two. So I think it's important to actually say up front and provide some basis and justification for this as to whether this stock is viewed as principally, I underline the word principally here, being a dividend or a growth stock. And again, using my phrase, using simple language to document the implications of market diversification or specialization. And what I mean by that is if an organization is deciding that what it wants to do is to, let's say, acquire in a different sector another organization, another company, in a sense, what it might be doing is diversifying its business operations. It could decide that what it wants to do is to trim down certain business operations that it's doing and focus or specialize on some other aspects, in which case what it's now doing is making its business more concentrated, as it were. Well, it's important, if this is actually what you envisage to happen or it's actually ongoing, for you to say what you think the potential effect would be on the company cash flows going forwards, and how such market moves or such organizational change or such strategic objectives could affect investor returns. I also heard some discussion today about types of investor and certain degrees of risks of a stock. So I heard things which suggested, for example, that you had an investor that was, let's say, at the very lowest end of the retail scale, So perhaps they're investing maybe 100,000 JA at a time. I also heard things about the riskiness, if you will, of the entity. It would be nice in a research report to be able to say exactly what you mean by those words. So what is risk? How do you quantify risk? What is your measure of risk? And state that. And again, say whether the stock or the company or organization under concern is viewed, using your parlance, as being a high risk, medium risk, etc. You should also perhaps, having said that, based on what you know to be a range of different risk appetites, to also conclude, therefore, as to the type of investor that the stock could be suitable for, having understood the relative risk of that stock. I also heard some discussions, or at least one discussion that was raised in regards to corporate governance. And again, I think this is an area that's often misunderstood and often not incorporated within the valuation of a company. And so as a consequence, what we tend to find is that individuals tend to look at the management structure, who's on the board, who's a CEO, what level of experience that they have. Yeah, which is kind of part of governance, but it's not everything. So we heard earlier, there was a question in regards to the percentage of females on the board, for example. Now, there's a reason for that. It may be that the view is that if you have a sufficient level of diversity on the board, you have a sufficient level of diversity of opinion. And the diversity of opinion in and of itself results in better risk, better managed organization. There is empirical data, much research out there to suggest that actually organizations with very good governance have superior return on capital, return on equity. Perhaps it would have been nice to have heard a bit more about the nexus between that in the presentations, but for sure, if you do have any concerns about the strategy or the corporate governance, then in a sense, this should influence your views about how sure those cash flows are going forwards. Now, having said all of that, I know I've crammed a lot in a few minutes, but I think much of it should be common sense, and much of it has been discussed. So having said all of that, I'd like to thank you very much for your time. And I'm not sure there's any facility for questions here, but if you do, then I'm willing to answer any questions that you may have.
Thank you so very much, Dr. Horton. Ladies and gentlemen, those of us in the room, those of us watching online, could we kindly show our love and appreciation? Now, let me just take the opportunity to say that I am almost positive that Dr. Horton was smarter than his professors in his class. I'm of the opinion that he probably was. But such comprehensive, because he said he crammed, but it was simplified and it was communicated in a way that can be applied even outside of market research. For anyone who is doing anything, any kind of project, or anything that requires you to do a little bit of presentation, it requires you to not take it lightly, and certainly not take your audience lightly. And a lot of it was not assuming anything. You could have investors who are educated by educational standards, and yet financial literacy is, and then we may have individuals who are not educated by societal standards, and yet still their financial literacy is top notch. And so it is for those of us who are within the sphere of increasing national awareness and increasing financial literacy to simplify and to communicate and to analyze. And certainly one of the biggest takeaways for me is that your reputation takes a long time to build. you're trying to build, but doing something like your market research and having it be incorrect can certainly ruin your reputation and all the work that you have worked for. So Dr. Horton, my summary of what you did might not do you justice, but certainly what you said packed a punch, and we appreciate you for your time, especially considering the time zone and the time difference. Thank you so very much, sir. So I believe we gave the judges enough time to deliberate. Okay, the judges are pointing over, which means that they have passed on the answers. And the director's, pardon? Is that Mrs. Marlene Street? I don't see. Okay, so we're going to, I know that Professor Curtin is not here with us. He actually presented via Zoom. So we're going to do the announcement of, I'm actually waiting for those results to come. And then I will invite Mrs. Denise Williams, Creative Director of Financially Focused Media, to make the presentation to our second place winner. And then I will invite Mrs. Marlene Street Forest to make the presentation of overall winner. Again, the winner walks away with 300,000 Jamaican dollars. The first runner-up or the second place winner walks away with 150,000 Jamaican dollars. And I believe each quarter winner would have won $100,000, if I'm not mistaken. So we are awaiting the results. And I can't wait to see, will it be Andre Rumble of Proven Investments, or will it be Chad Anthony Coke, NCU? We want to thank the Jamaica Stock Exchange for being the host of something that is so important, encouraging more analysts to get involved, encouraging them to improve their presentation skills. Are we ready, sir? Oh my God. Oh my God. I want to make sure that I don't have a Steve Harvey moment. I want to make sure that whatever I say today is so it goes. We thank the Jamaica Stock Exchange for being the host of this. We do believe it is extremely important as we try to hone skills from our new market researchers. We also thank the judges and the committee members for really being a part of this process to ensure that you chose the best and to get the best out of our market researchers. And I want to thank everyone who was involved. We had over 300 applications, and even though you may not be sitting down here today, certainly your work was not overlooked. I'm going to invite the gentlemen to the stage. And again, we can't see if they're smiling, if they're crying, if they have their game face on, because they have on their masks as we observe all COVID-19 protocols. I invite Ms. Williams, Creative Director, Financially Focused Media, as well as Mrs. Marlene Street Forest, or we don't? Okay, no? Okay, so we're just going to do the gentleman? Well, I suppose under circumstances. How y'all feeling? Are we sharing the money? Are we sharing the money? Because this presentation can go south right now, depending on your answer. Are we sharing the money? Did you guys get that on camera? But they will tell you that they didn't say how much they're sharing because they're brilliant gentlemen. It is with extreme honor that I present the winnings to the winner of the Jamaica Stock Exchange Market Research Competition. And the winner is, drum roll, drum roll, drum roll, excitement. It is an absolute tie, not one, but two winners. Therefore, we congratulate Chad Anthony Coke as well as Andre Rumble. And in case you're wondering that if they tied, it means that we split the $300,000, the answer is no. No. Each winner walks away with $300,000 each. So gentlemen, I'm going to invite you to the front. Denise is here. Do you want me to get the other judges? We invite the other judges because you were a part of, I don't believe we've ever had this in the history of the stock exchange market research competition. But certainly it is just a testament to show you the level of dedication, the quality, the time, effort. These gentlemen were able to answer questions on the spot, follow-up questions they were able to do. Therefore, the judges thought that it was only fair that both Andre Rumble, as well as Chad Anthony Coke would both be winners of this year's competition. They will walk away with $300,000 each, and I believe they will be getting trophies each, because now we will adjust and adapt to this announcement. I know that the stock exchange will be very, very pleased to see this, and certainly it has set a new bar, a new standard for those market researchers who will be coming, futures to come, generations to come, that this is the standard that we should definitely try to keep. So again, Andre Rumble representing Proven Investments, and we have Chad Anthony Coke, who will now be the first student to walk away as a co-winner of this year's Jamaica Stock Exchange Market Research Competition. So remember we said that there was the oral presentation scores and then there was the written scores, 60% and 40%. And after they averaged out the scores, it actually came out to be a tie. And so now, as the host, and I asked them the question earlier, I asked them if they'd share the money. I now get a share of $300,000 each. That is what you call a smart investor. Huh? So now I need to ask for my percentage. That's what I shall do. So now I get a dip of not only $300,000, but $600,000. Congratulations, gentlemen. Job well done. May I get a photo with these gentlemen as well? Because I shall be sharing. He said to come in the middle. Because I shall definitely be getting a piece of this. Look at me, gentlemen. Look at me like we're best friends. We're best friends. Look at me like we're best friends. Congratulations, gentlemen. Thank you so very much. So we just want to thank, well, let me say, come back, gentlemen. What we were going to do is that the winner should have been given an opportunity to say thank you, whether it was to somebody who assisted with the research, you know, whether they were team members. Because there are two of you, I'm going to allow you both 3 minutes each just to deliver your gratitude speech. So I'll start with Andre Rumble.
Good afternoon again, everyone. Today has been quite an interesting day, to say the least. You know, we've never had two winners before, and I'm extremely grateful and humbled that I was given the opportunity to participate, firstly, and also to have the camaraderie and the competition from also Chad Anthony. You know, his work was well done, and I'm grateful that both of our efforts were showcased today, and we both came out victorious. So today we're both winners, and I'd just like to thank, firstly, the Lord, because without him I would not be here and this would not be possible. Secondly, I love to thank my team at Proven and everyone at home that assisted me throughout this process, both emotionally, mentally, and just every aspect of this entire process, from entering the first time to being here on this stage right now. And I just really want to take this opportunity to thank the Jamaica Stock Exchange for putting on such a competition. Thank you for showcasing what is possible to current and upcoming individuals that may be aspiring investors or aspiring market participants in any capacity, whether it be in the financial industry or outside of the financial industry, that it's not limited to just the analyst or to the person with the knowledge, but investing is for anyone and everyone who wishes to advance their wealth via this medium and also enhance their financial literacy. Because at the end of the day, we are all here to learn, and I'm grateful that I was able to learn and share what I learned with you guys. Thank you.
I think most of what I'll say is off precedent of what Andre said, to thanking the JSE for the opportunity for students and analysts alike to enter this competition and showcase their skills. And I'm also thankful for the Lord and his leading in my life, and friends and family for their support from the fourth quarter up until this point. And I'm extremely humble and grateful for the opportunity and the confidence placed in me by the panel and the JSE. And again, thank you.
Thank you. Thank you so very much. Well said. You know, Chad just have a stance where he's just like, yo, I'm rich. Real rich. Thank you so very much, gentlemen. Job well done. So on behalf of the Jamaica Stock Exchange, on behalf of Mrs. Marlene Street Forrest, the chairman, Professor Curtin, the esteemed judges, the committee members, the staff of JSE, everyone who was a part of putting this together, thank you so very much. And for those of you who are watching, we hope that you learned more about investment and that you will take that leap. For those of you who weren't really sure if you wanted to participate next year, I think this is evidence that you should totally go for it. So I'm Terry Carell. It was a pleasure being your MC for this afternoon. And for all the information that you might have missed, it will be published not only on the Jamaica Stock Exchange's website, but also in the national media. So thank you so very much, and please be safe. Take care. So we're going to take the opportunity to also present the trophy. Naturally, we would have just had one trophy, expecting one winner, but certainly we'll have to figure this out. So we're going to present the trophy right now to the gentleman. We're going to ask one of our esteemed judges to do that presentation. And again, we just want to acknowledge Andre Rumble and Chad Anthony Coke for the level of sportsmanship and respect that they showed to each other for the duration of the competition. Certainly, this is the new standard for anyone who is thinking of entering this competition. All right, thank you so very much. You gentlemen can let me know when the check is cleared.